So I'll keep this hidden for now. Like, wow, what's the intrinsic value? We'll start with the revenue
So,
build.
so just to put in the perspective, all right, just guys, just put in the perspective, okay? AMD as of March 30th, okay? March 30th, the price of AMD as of March 30th was a 193. We're at 443 today. It's more than doubled. And that's mainly because of a surprise on their earnings announcements, okay? Surprise in the earnings announcement saying, okay, well, all of a sudden, CPUs are much more in demand than we anticipated and the market anticipated. Okay. All of a sudden, CPU demand, which is bread and butter business for AMD, is far more in demand than previously thought. The GPU space is NVIDIA. It's also AMD. But where is the CPU space? Well, CPU is AMD, Intel, and there was a trade, by the way, today on Intel on the newsletter. Okay, guys? Intel's had a huge run up, but are we buying? We're going to leg into Intel at this point in time. Yes. Now, what does that mean for the likes of Nvidia? Bill, I saw your question here. Are we buying Nvidia? Yes, we are, because um, the GPU space hasn't really changed a lot. The GPU space is still very much in demand. So for us, are we still buying Nvidia? Yes. We are buying Nvidia. We are not writing a lot of covered calls. We continue to buy Nvidia on weakness because our price forecast on Nvidia over the next number of years, because of GPU demand, not CPU, GPU demand is substantially higher than it is today. But AMD and Intel Corp, those are really been driven, and there's other companies as well, like on the memory side, Micron. They're really been driven by the demand for sectors that really weren't anticipated. And that's why the market didn't pick up on it. And they've had this huge run up of late. Okay, so Danielle, this is the
Yeah.
discounted cash flow model for AMD. Okay,
Yes. Yes.
let's take a look. So, what sort of growth rate are we anticipating over the next number of years?
Yeah. So sorry, AMD has four segments basically. One's client, the other's data center, then it's gaming, and the last one's embedded. So
Could you
so
define those?
how,
Danielle, can you
yeah,
define those?
yeah, I'm going to define those. So how
Okay.
AMD basically categorizes its products is that client is basically CPUs, but for normal PCs. Okay, so its CPUs are divided into two different categories. One's for client, like normal clients. We buy these HP laptops, Apple laptops, other laptops, Intel laptops. They are AMD laptops as well. Okay, so client CPUs are those. There are other CPUs as well. Those are called data center CPUs, and AMD's center CPU products are called EPYC CPUs. So those are clubbed into this data center revenue. Those don't come in this client revenue. Okay. Then gaming is AMD's products that are used by different like these gaming infrastructure providers like Nintendo or PlayStation, AMD switches and stuff like that. AMD's graphics are used in those products. And the last is embedded. So these are like some complex sort of computing equipments that are produced by AMD. These are not the bread and butter of the company. So these like do well. These
No, gaming is not the bread and butter of the game. The name of the game is artificial intelligence. So let me ask you a question. Why is artificial intelligence requiring so many more CPU chips?
Yeah, so the first reason is, and I've done this division. So the first reason that why they're requiring so many
Is
CPUs,
everyone familiar? Sorry to interrupt, Danielle. Is everyone familiar with the difference between GPUs and CPUs? Danielle, maybe you just want to just let everyone know what is the difference between a GPU and a CPU?
the GPU is a graphic processing unit, and it's basically needed in order to render graphics or do like difficult tasks basically. So I'm gonna just define both in layman terms. GPUs are graphic processing units. They are designed to do difficult tasks. And I can give you an example. When we were younger, we wanted to play different video games on our PCs. We needed GPUs in order to render those graphics. Otherwise, those games wouldn't run on our PCs. I remember that like 20, 25 years ago, we weren't wanting to
Yep.
play those games like NBA or whatever. We weren't able to play those games on our PCs unless we had an NVIDIA GPU installed in our computer. Okay, because it wouldn't render graphics and the game wouldn't run. Okay, so GPUs are designed to do difficult tasks. CPUs orchestrate different tasks. Okay, so CPUs are don't do difficult tasks, but what it does is it does simple tasks, but it orchestrates different tasks. Okay, so your computer needs CPUs, but and would do simple tasks, but GPUs would do difficult tasks. That's the difference. AI from 2023 to 2020, start of 2026 was thought of as a difficult math equation, I would say. Okay, you AI is like you. It only would require you can only work on AI, and it would only do difficult tasks, and that's why GPUs were needed. Now with the rise of agentic AI, Anthropic came up with its model, and that was doing agentic AI stuff. So the difference between generative AI and agentic AI is generative AI right now is you ask ChatGPT a question and it'll come up with an answer. That's generative AI. Okay, you ask a question and then it would give you an answer. And the difference is supposedly I wanted to go from here to Whitby. Okay, I would ask
Okay.
ChatGPT one question. Okay, what's the weather like? And it would give me an answer. Okay, weather's like 10 degrees outside. I would ask like, will it rain? It would give me an answer. Yeah, it probably would not rain. You can go there. And then when I would ask like, what's the distance between my location and Whitby? It would give me the location. I would say like, where should I get the car from? It would give me an answer. So this is generative AI. I'm asking one question and it's giving one answer. Now agentic AI, as I'm just gonna put in, I want to go from here to Whitby, and it would come up with all the possible scenarios and what I should do. Like it would tell me like if it's gonna rain or not, where should I get the car from? What's the distance? What's the best possible route? So I'm just giving it the end goal, and it's giving me the solution to reach that end goal in the
This
most.
doesn't sound like it's going to end very well for like travel agencies, then is it?
It isn't gonna end well with for yeah. It isn't gonna end well. It's not gonna end well for travel agencies. It's not gonna end well for software companies. It's not gonna end well for a lot of companies. So
Yeah,
yeah,
I would
so
agree.
generative AI is doing that thing. Okay. So for generative AI, like what was the first AI? I forgot. Sorry,
Mimic.
generative AI. Yeah. So generative
Yeah.
AI, it required GPUs. It was doing difficult tasks. Agentic AI requires GPUs and it also requires CPUs because it would give you an answer, but in order to orchestrate everything, CPUs are needed. So previously for generative AI, the ratio of CPUs to GPUs was one CPU per eight GPUs. Now with agentic AI, the ratio has come to 1 to 1. So for every GPU, you would need an equal CPU with to go along with that in order to orchestrate everything. The GPU would do the difficult task, but in order to orchestrate everything, CPUs are needed. So that's where the power of GPU lies as of now. Okay. Um, AMD has four segments, but two segments are the bread and butter of AMD. One's the client, so PCs, they sell a lot. So if the PC market is strong, that means AMD's client revenue is doing well and CPUs are doing well. And AMD competes with Intel in that space. So either Intel CPUs are the name of the game or AMD CPUs. But
So,
AMD
what
is
are the
fully
what are the main CPU providers, Daniel, in the market?
AMD and Intel, basically. And ARM is the third one. ARM
Yes.
Holding, it's a UK-based company. Previously, it's not a CPU provider. It used to like design chips, design CPUs, but now it's come into this market. It says that we are going to just supply CPUs as well. So ARM will be the third largest CPU provider after these, but these two were the main CPU providers. Now, as far as data center is concerned, what's being the projection is by 2030 the AI data center market would be 1 trillion. Okay. So if we divide, and this is the common division that's thought of. So 50% would go toward GPUs. We would say like 15 to 20% towards CPUs. I'm taking a conservative estimate of 15%. 15% toward networking and 20% towards memory and storage, the likes of Micron, SanDisk, and whatever. Okay. So there's a question. I'll answer that afterward. Okay, so AMD's GPU market share, if we take a normal baseline estimate of 15%, right now it's 10%. Okay, so that's a conservative estimate. An optimistic would be 20%. The rest of 80%, you know who holds that market share? So if we take a baseline estimate, base case estimate of 15%, like AMD would have a GPU market share of 15% by 2030. So that means its revenue from GPUs would be 75 billion in 2030. Right now, its revenue from GPUs is 8 billion. Okay. So this translates into a revenue growth, GPU revenue growth of 75%. Okay. And because CPUs are like 150,000, and if we divide CPUs between Intel and AMD, the CPU, AMD CPU market share would be around 118. AMD CPU revenue would be around 118 billion by 2030. Right now, it's 16 billion. So that would translate into an increase of 70% per year. So CPU revenue growth is going to increase by 70%. And at the same time, GPU revenue growth is going to increase by 75%. So that is how I
So
arrived
that's
at.
why for example, we're continuing to buy Nvidia as a result of that because GPU growth is still there. However, in the CPU space, there's only two players, which is namely Intel and AMD. So they have a huge growth category, but there's only two players in that category. And this is why you've seen a big spike up in Intel price and a big spike up in AMD price. Nvidia may be experiencing a bit of a spike up, but they're not in the CPU space. But it's not that we're not going to continue to buy them. We are because of the GPU growth. This is a
Okay.
bit different. Okay.
Yeah. So
Uh,
do you want me to answer these questions? Meanwhile.
I'll- Let me address them. Anthony says, "How about Cerebrus? CNBC is all over their IPO today."
Yeah. So Cerebrus, what it does is it's the same thing. Like so, I mentioned earlier. I mentioned like there are two types of memory chips. One's SRAM and the other one's HBM. So Cerebrus, what it does is it supplies SRAM memory. Okay, so this sort of memory, so they are like placing bet that some of these AI platforms would go for low latency and SRAM memory. It's a niche category. That's why like CNBC is all over their IPO. Like some of these data center, so some of these AI providers might go for like this small memory, but it's a niche category. Okay, it's not, it's just because it's doing well because it's one of the few suppliers and it has a very low market capitalization. It would do well, but it's nothing as compared to the ocean that is the HBM memory. Okay. So it's gone with its IPO, it would do well, but the thing is it can't compete with HBM memory in my as per my understanding. And the reason is you can go for low latency, but HBM training models on large parameters is the need of the hour. Grok can do well with retail clients, but it probably may not do well when like the large institutions and bigger cloud providers need services because it's not trained on large parameters. To train on large parameters, you need more memory, and SARM memory is not anywhere near to HBM. So that's why Cerebras is doing well. Yeah, it had its IPO, but it like basically sells SARM memory as compared to HBM memory. The second question is, so when we are comparing Intel versus AMD, which one has more potential? I think both have potential. The thing is, AMD so it's like both have potential, I would say. AMD is competing in the GPU space and the CPU space. On the other hand, Intel is competing on the CPU space and in the CPU space and with TSM in the foundry space. It's a laggard there, but it's competing in another space. So both have potential, in my opinion. It's just
So I
that right
guess
now, in terms of financial management and financial discipline, AMD is much better because Intel is going through corporate restructuring at the same time. So it would take some time for the company to have and develop economies of scale.
the $1 million question for everyone here is: they both had a big run up. Is there room for them to run up? So Danielle's answer the question in terms of AMD versus Intel. We're more comfortable with AMD simply because of its diversification of product mix and the service mix, as opposed to Intel. But even Intel's had a huge run up. It doesn't necessarily mean that it cannot go up more because of the category it's in, because of that CPU demand. Now, I wish I had known this a few quarters ago, but it's very difficult to anticipate this stuff ahead of time. Did anyone know that CPU demand would be so much in Forefront? No, we didn't know. But we knew GPU demand was. Now, with that latest earnings, CPU demand is going to be through the roof over the next number of years. So, Danielle, I think there's one last question here. I can answer it here.
It's
Or it's a
common.
comment here. AMD is well positioned from Harminder all of a sudden with both CPU and GPU capabilities. Absolutely. So let's take a look at AMD. It's had a huge run up. Like I said, 190 to 440, and that's in the last month and a half. How much more can it run up, Danielle?
Yeah. So like I just went over like how I derived revenues. Now the reason that AMD is supposed to do well is twofolds. One of the reasons is that its revenue, data center revenue is going to grow on because of both its because of its two products like GPUs and CPUs. So that's going to lead to higher revenues in the coming years. The other thing is margin expansion. So AMD said, and it's projecting better gross margin. It's because it's dealing in higher margin products now. Okay, so GPUs and the CPUs that it develops have become higher margin because it's able to garner a better price on those because of tight
But
supply.
in your projections, Danielle, you have declining margins.
No, these are margins. So
Oh,
this is
I'm
cost
sorry.
of goods sold. Yeah, this is
Oh,
cost of
cost
goods
of
sold.
goods sold. Okay, I couldn't see that
Yeah,
section.
sorry
Okay.
about that. Okay, so these are the margins.
Okay. So yeah, so 3% or so over the next number of years. But look at
Yeah,
that
so
revenue expansion, right? The revenue expansion is huge.
yeah, plus the other thing, so margin expansion is not only happening on the gross margin side, it's also happening on the operating margin side. And there's much more margin expansion. It's because like the company is
It's
going to
economies
do
of scale. Yeah.
economies of scale and the company is going to do R&D, but it's not going to do like it's going not going to be linear R&D. Okay. R&D is going to be a component, but it's going to be a smaller proportion of the overall revenue as the revenue becomes larger and larger, right? So
Now,
that's
guys,
why.
I just want to say something. We can forecast this all we want, and we think we have a pretty accurate forecast because we're not biased in any way. However, I always want to keep in mind that things can get derailed in the short run. Probably not the long run so much, but if there's another war, if this particular war goes out of control, if there is rampant inflation because of this war, these are all things that could derail the stock price in the short run. But what probably won't change is the revenue, the size of the addressable market, the operating income, the operating margins. These are things that won't change because in times of, where you have, um, times of economic prosperity and when the market's in a good mood, it gives it a higher multiple. When the market's in a poor mood and times of economic uncertainty, it'll get a lower multiple. So long term, Danielle, you clearly have revenue increasing substantially. Just go to the revenue section, Danielle. How much do you think revenue? So right now, this year, 2026, you have the revenue at 32, correct?
No,
32 billion?
I have the revenue, full year revenue, 61
Oh,
billion.
here. Yeah. Okay. So
Yeah.
61. So my apologies. I can't see your left-hand side. So maybe you just want to zoom out a
Yeah.
little bit.
Zoom out or zoom
Zoom
in?
in.
Zoom in, right?
Yeah. Or zoom out so I can see the left, or maybe scroll across so we can see the left-hand side. Because these numbers are there, but you can't see what the numbers actually correlate to, right?
Okay,
So
so now
six
can okay.
now I can see, yeah. So look at the potential growth that Daniel has forecasted, okay? 61 billion this year, 95 the year after, 148 the year after that, 229 the year after that, and 348 the year in 2030. 2030 may sound like it's a long ways away, but it's not. About 3.5 years away. So it's not that far away. So Danielle, where do you have the operating income at? The operating
First,
income at.
first, I just wanted to say like,
Yeah.
okay, the revenue is increasing here in absolute and in like quantitative terms, but the we are like still decelerating the growth, and that's pretty conservative in my opinion. We're still decelerating growth. That's the first thing. The second thing is you mentioned operating income. So operating income would look something like this.
So by 2030, you think we're going to have 10x the operating income?
We're gonna have 10x the operating income because of a higher revenue and margin expansion.
What does that mean for me as an investor? I'm looking to invest. Like I look at AMD stock has gone from 190 to 440. It couldn't possibly go any higher, could it?
Okay, so one thing, if you look at your IBKR, I'm not sure, I didn't look at IBKR, but like Yahoo
I can look
Finance,
it up as we speak.
yeah, you can look it up. So my earnings for 2026 projection is 5.59 per share. I'm pretty sure it's higher on IBKR, the analyst's expectations, and it's higher on like whatever expectations I saw, those expectations are higher than what I've come up with. I'm pretty sure.
Yeah, they look like they're at. I'm looking at a Ford P. A Ford P
No,
would be
not PE,
2027.
earnings per share, forecasted earnings per share for 2026.
Yeah, I can deduce it from the Ford P though, right?
Okay.
So Ford P for 2027, okay, or for the remainder of this year and 27, it looks like it's about $9 a share. So not 26, but 27. You have it at 984.
Yeah, so second year is fine, but if I show you like what these analysts, one sec, let me just open it here. Let me share the other screen.
Yeah, I think the analysts have it for this year. Again, I'm just going off IBKR data, but they have it for about looks like about $4 a share.
Okay, so if I see it here, the expectations for this year is 7.35. This is the average estimate. Low is 6.45. If even if I go to Nasdaq and if I put in AMD, the earnings, the expectations, the consensus forecast is 6.17 per share.
For 26.
Oh, yeah, for 26. And mine is lower than that. It's 5.59.
You're being conservative here.
Yeah. So the estimates are higher as compared to what I've come up with because I think one or two things are happening on their in their estimates. One is they are projecting an even higher growth of revenue, or they are projecting better margins in 2026, which I'm being conservative. So I'm still being conservative. Okay. These are the earnings projections, and if you see like the earnings are gonna get very high if like AMD continues in this
So
trajectory.
Daniel, I'm just playing devil's advocate here.
Yeah.
You know, at let's say a multiple of 25, let's say I'm going to call it 30 times earnings by 2030. And I might be being a bit aggressive. I might not be aggressive enough, but 30 times 53.24. What kind of price could that give us in the stock?
1,597. But right now the forward PE of AMD is 55, by the way.
Yeah, but you would expect that to
Yeah.
decelerate as it becomes more mature.
Yeah, it becomes more mature.
Let's
And
put that even at,
AI is also past its infancy. Yeah.
yeah, even if we put that a more conservative figure of 25, what does that bring us to? 1331. And we're at
13.
14, we're at 440 today, guys. So we will even though it's had a huge run up of late, and it could pull back 20%. That could easily happen. Like if there's a major geopolitical event tomorrow or inflation goes up, we can get a 20% pullback. But what we don't think is going to change is the AI story. The AI story is not going to change anytime soon. And
Yeah,
that means,
sorry.
sorry, go ahead, Daniel.
No, no, go on with your point. I'll say what I want to say after you're done.
Yeah, I was going to say the AI story is not going to change anytime soon. This GPU and specifically CPU demand, which AMD specializes in, is going to be in demand for a number of years. And this doesn't take into account, Robert, you've said this in the past. The further out you go, the less certainty there is. 100%. We don't know what sort of snags they may hit. We don't know what sort of other businesses they may get into, and that remains to be seen. But for now, what we can do is we can sell puts pretty aggressively on AMD, which we're going to do, and take advantage of that high volatility, get paid a lot of money. Now, again, the idea is not to lose money, right? So if we are assigned AMD, I'm just going to give a sample trade right now. AMD is at 447 as we speak. If I were to write a put on AMD a month out or 22 days out, June 5th, June already, wow, seems like the usually started, getting paid $30 a share.
What
30
put
bucks,
what put
guys.
what put did you choose? What strike did
June
you?
5th, June 5th, 445s. Okay. 30 bucks approximately. That's a very hefty return, almost 7%. So we're more than happy to take that because if we get a sign, well, our thesis is long term, we think it's going here. And we did write some covered calls and we got called away, unfortunately, but we didn't know that was before earnings, before that CPU surprise came in.
Yeah,
I don't think we
before
didn't know about the
Intel.
CPU surprise, and nor did the market. That was only unveiled afterwards because this whole artificial intelligence story is unfolding. Daniel, did you anticipate the CPU demand?
No, I did not anticipate it. It's
My
after
God.
we stopped writing calls on AMD as soon as Intel's earnings came out, because that's when we got to know that CPUs are a thing now.
Yeah. So, anyways, guys, the bottom line is there could be a lot more upside from here, even if you look at next year. But Daniel, you have earnings per share at 9.84.
Yeah.
Okay, let's go 9.84 times well, call it 50, same 492. So that means we're pretty comfortable writing. And again, sometimes stocks trade ahead of themselves, meaning they'll anticipate future growth and they'll price that are now. That happened to Nvidia, that happened to Tesla, and then it takes a while for the earnings to catch up. But the point is, for this company, we're more than happy to continue to write puts aggressively. It has a high implied volatility. How many people here write puts on AMD? Just a question. And this is to give you more confidence to write puts more aggressively on AMD. Love to hear
I
your feedback.
Yeah, I wanted to mention 2 points. First is there's a difference between trading and investing. So if you're investing in AMD and
Absolutely, there is.
you know the intrinsic value of AMD, then it does not matter in the short term whatever happens because you're investing. Investing is you're like in the market mid to long term. It's not
Well,
short.
that's the whole point about being aggressive on your puts, right? So if you
Yeah.
want to be aggressive on your puts, you can be because you have no problem owning the stock.
Yeah,
So the implied,
as far as puts are concerned, one thing that I've noticed. This is my observation. It's not a rule or it's not law, but like this is my observation. Any stock that's trading above its 200-day moving average and you write a put on that stock, it's more than likely, and you put a GTC order at 80% or something, it's more than likely that you're going to buy back that put and you're going to earn a premium. More than likely. It's very unlikely that the stock is going to fall below the intrinsic value and you're going to get assigned that stock. It's good if you get assigned, but you're going to earn a good premium on that.
yeah, but sometimes you do go on the intrinsic price. So let's talk about the intrinsic price. What do you have the intrinsic price of on AMD? So intrinsic price means the value of the company as it is today. So where do you have it at, Danielle?
I have it. So we do a two-pronged approach. We have a terminal value multiples method and a DCF method. We take the average of both. So the average comes out to be 503.
And we're at 440.
We are 440, and this is base case.
Anthony has a comment here. Oh my, I wrote two puts for AMD 260 and 270 for January 27. 10 contracts each for a total of 150K USD potential income. Yeah, the only thing, Anthony, if you're writing that far out, you got to understand that you're not going to be benefiting as much from theta decay. But that's a lot of money to that's a lot of income to collect. And I'm sure you probably don't mind owning them at 260 and 270. Um, Especially now that you've seen our forecasts, guys. Do these forecasts and research reports help you guys? We want to know. Anyone mind commenting? First of all, who's trading AMD? Is anyone trading AMD? And these forecasts and research reports on these companies give you more confidence on investing in them. Don't be shy, guys. Bill, absolutely they help. Fantastic. Good to hear that. I'll wait for a few more comments if you guys wouldn't mind just commenting here. Do they help you in making a decision on whether to invest in a company or not? Now, again, like I said, short term, anything can happen. Anything. Donald Trump goes to China, steps on a banana peel. Who knows what happens, right? We just don't know. A resumption in the war, and all of a sudden, a bunch of oil facilities get bombed. Inflation goes to the roof. That's a problem. But what it won't change is it won't change the pace of technological advancement. What it will change is the multiple and the risk that the market is willing to put on that particular asset. Anthony says, indeed. Okay, Anthony, good to hear. And Harminder saying 100%. Willing to hold AMD. Now, no to hold it for a while. Yes. Now, that might be the thing. Now that you know this, okay, are you going to write some covered calls at 500? You might, but you might be playing with a bit of fire. So, Daniel, let's go to your bull case. Let's do 1 year projection, right? Let's go to your base case, your bear case, and your bull case.
Yeah.
Why
So
don't we start with the bear case?
yeah, so bear case is this.
The bear case is 374. Okay? Average price, correct, Daniel?
Yeah.
Okay, so right now we're at 440. But if we're collecting, you know, $30 on a put, that's not such a bad move for us right now. So I'm just going to go to this put here again and just make sure that I'm not missing anything because I don't think I am. That's a very healthy premium because we're trading an implied volatility of 68. So June 5th, 445 puts are going for approximately $30. So that would lower our cost basis down to 415. So that's our bear case. Okay, now let's go to our base case. So there's bear case meaning if things go bad, the economy gets wonky, the company doesn't execute as well as they should. A bad case scenario, things we don't want to happen. Now, base case is if things go normally as projected. Okay, we're at 503. So collect that $30 put is a big deal. Okay. Now, Daniel, let's go to your bull case. Bull cases mean if things go better. If this war ends all of a sudden, inflation comes down, the market's giddy, there's lots of money in the market, and people are looking for places to invest, we're at 709. So that means in all three scenarios, writing puts for us, we have no problem, and we have no problem being aggressive. And that's why it really pays to understand the value of the company that you're investing in. If you're investing in this company, and this is the biggest mistake that investors make is, well, they sell their stock off way too early. It's had a good run up. Oh, I'm gonna ditch this because it's gone from 190 to 275. And again, we did sell some shares prior to this because our model changed substantially after we saw the CPU demand on the last earnings call. But before the last earnings call, we did sell shares off because our model was built out for that. But now, because of the forecasted CPU demand, our model is much more aggressive. So, do you mind selling a put at 445, collecting $30 for 22 days? Probably not. That's a very nice premium to receive. Danielle, now this is a 1 year forecast. What if we go a few years out?
What if we go a few years? Oh, that's the iteration what we did here. Like we're gonna just multiply.
Share price. Share price.
Yeah, the share
Do you have a
price.
do you have a share
No,
price breakdown, or just we have to do the multiple?
we have to do the multiples because like whenever we do a DCF, like it's for 1 year.
Yeah. Okay, so let me ask you a question. By 2030, okay, what do you think a bull case multiple would be?
I would say it's tame 55.
Okay, so let's try that. 53.24 times 55. What does that come out to? Almost $3,000 a share. And you see it's a big variance between the two numbers, right? 1331 and 2928. Uh, if it does go to 2920, that's roughly 7 times the value it is today. 7 times. Okay, 700% return. Now, that 7x return would make the company worth, I'm just gonna look this up while we're doing this. It would make the company worth roughly $5 trillion. Just a little bit, tad wee bit over 5 trillion. It would still be worth less than Nvidia is worth today. So Danielle, do you anticipate this company potentially going to that $5 trillion valuation? So Nvidia right now, guys, is at $5.7 trillion. It's already hit that number. So can you see a scenario, Danielle, where this could hit 5.75 $5 trillion?
I do absolutely anticipate AMD to go to that level, but two other things would happen in the meanwhile. The multiple would shrink, and the other thing that would happen, they would do stock splits in order to keep the share. like have liquidity, like retail investors be able to buy that share, because like no retail investor would, like not many retail investors would
No.
be able to afford a share that's above $1,000. We have seen that with other companies like Samsung,
Yeah.
ALAC.
But that wouldn't affect the market capitalization. It
There
wouldn't
wouldn't
affect
they that
effective.
wouldn't affect the market cap, but the share, like it wouldn't be
Yeah.
3,000, it would be something less, but the market cap would be 5 trillion.
Yeah. The market cap, like Nvidia's trading at 300 and
230.
230, sorry. Yeah, 235. So Nvidia's trading at 235, but it's worth 5.7 trillion because it's
Yeah.
had multiple splits since then. So you're
Yep.
100% right. There will be splits, but those splits are not going to be something. This is pre-adjusted split. So
Yeah.
if there were no splits, and splits are good because it allows more retail investors to get involved with the company. So if you have to buy one share at 29.28, well, you're almost consuming $3,000 US. Not many people can write a put at that level, right? Because that's going to chew up $292,000 capital. That's US dollars. So that's why stock splits happen. And stock splits are generally a very good sign for the future. So what we want to highlight here is simple. It looks like the demand for, and this is why I wanted to show that example of what we were able to do, our own use case scenario, but revamping the newsletter, completely overhauling our website. A lot of this is being done with artificial intelligence. For me to do all that work, I had to hire a marketing person, and I have in the past. We've hired marketing people in the past to do all this stuff for us. Now I can do it myself, and it did take a lot of time. It did take time, but it's also saving a bunch of time. Now, this reminds me of when I first, I'm an old timer here, but when I first saw the internet, I'm like, this reminds me of the first internet. Like it was like there was this thing called altavista.com, yahoo.com. Yahoo's still here.
AOL. AOL.
AOL, yeah, and it was like so slow, and there was that weird sound that your phone made when you called up to it. It was super slow. Yeah, so it was totally different. This is where we are in the stage. So, can anyone accurately forecast what artificial intelligence is going to do 5 years from now? You have an idea, but the further out like you go, the harder it becomes to actually forecast. Right? What happens when artificial intelligence means robotics? We've talked about this with Optimus. Well, theoretically, you get an unlimited labor pool. Now, what does that mean in terms of things like war? Well, are armies going to fight in the future, or a bunch of drones and robots going to fight? Who knows? We don't know where it's headed. But and how many jobs will be lost, and how quickly can people transition to new jobs? That we don't know yet. But what we have a fairly good idea about is the technological advancements are going to require a lot of energy, a lot of water, a lot of processing power, a lot of cloud storage and memory storage. So we're investing in those categories. How it all unfolds, we don't quite know. And people are saying, "Oh, this is a lot like 1999." I was there in 99, 2000. So was Matthew, right? Daniel, you were probably a little bit too young back then, but the companies in late 90s, early 2000s, and the Nasdaq went from 1,000 to 5,000, and right back down to about 1,200 bucks. It just collapsed. Okay, it was a huge run up on the Nasdaq. It basically 5x, 5x. Now today we're at 25,000 Nasdaq, so it's a whole different ballgame. We're much further ahead. This is the whole point of having time on your side. Um, but when it went down to 1,000, people were in shambles. The main difference between now and then was back then any company that was talked about, named, spoken about, didn't matter. All of a sudden had an astronomical valuation based on no earnings, simply a business model. No earnings, just a business model. Say, okay, well, this company is going to be doing this, and therefore it should be worth that. Well, there's no earnings to it. The difference this time is these companies have tangible earnings. Like AMD is making a lot of money right now. Tesla is making a lot of money right now. A lot of the companies that we invest in they're not losing money. which is the main difference between now and then. Back then, those companies were not making any money. They were losing tons of money, but they had great ideas. The whole internet was new and the potential was unlimited. And that's why the market just kept bidding it up. But even then, time forgave everything, right?
Plus, there's more historical reference now as compared to then. Like there was not
Yes.
no history back then as to like they just invested and they had no historical reference as to what happens if you invest without looking for earnings or stuff like that. Now there's more historical evidence because a lot of events have transpired. It's not to say like another event can happen, but it's just to like say that like there's more historical reference now as compared to 25 years ago.
Yes, exactly. Anthony says here, even if AMD went sideways in price for a while, they would have so much free cash flow they could buy back. I'm assuming stock here, so much in shares to support price and raise it. Yeah, now they may buy back stock. They may not. They may decide to start paying a dividend. Um, they may. Uh, who knows what evolution is next in artificial intelligence? Maybe they decide to invest in a little research and development, R&D, capex. Who knows? But yeah, the point is, it's a good problem to have. Robert says, Ask Jeeves. Yes, Ask Jeeves. Netscape, web crawler. Yes, those are all the names from back in the day. Anthony says, I think what also helps mitigate this from a bubble is the constraints we talked about in terms of bottlenecks, energy, GPUs, CPUs. Yeah, these are all constraints. I'll tell you the biggest one of all. If something happens at Taiwan semiconductor factory, we have a huge problem on our hands. If it's something happens, if it, you know, somebody bombs it or like, then it doesn't mean technology won't keep moving forward. It means things will be delayed for a long time and valuations can be affected very drastically. There would
But
be a massive pullback in the markets.
but I have a question.
Yep.
Who benefits if something happens to TSM?
Who benefits? What do you mean? The Chinese benefit mostly. If they were to take it over, is that what you're referring to?
No. What's the alternative chip manufacturer
Oh,
apart
it
from
would be Intel. It would be Samsung.
yes?
Yeah, 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 yeah. It would be Intel, Samsung, etc. Yeah, and that's why they're trying to build fabs across the United States, so it's not the dependency. But I was simply trying to highlight the fact that look, you can forecast all you want. There are certain things that you cannot forecast for. So when we made our last forecast, we did not anticipate a war in Iran between the United States and Iran. We just didn't. Why would you? It wasn't on the table. So, but here we are. So now we have to forecast that as a potential. Now, could this war spill out of control? Could it get bigger? Could it cause inflation to go much higher? Yes, these are all possibilities. But we're pretty confident in our projection in terms of what this could mean down the road. Okay. All right, Daniel, anything else? We're a little bit over time here. Anything else that you want to share?
No, no, no. This is all for today.
Okay, guys. Thank you so much for joining us. For those of you joining us tomorrow, we will see you then. Take care. Bye.
Bye.